many sights to see.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is the 13th day of May, Thursday, and this is the Daily Report. Gold is currently trading under pressure, currently trading at 1233.55. It is forming typically what we call a harami, although because we have what's called a fix, meaning a continuous market in the Forex, a harami itself, you would have a large bodied red candle in an uptrend, which we see, and then in the center of it would be a small bodied candle. Now, in this case, you've got a very similar formation to that. The interesting thing that I'm finding is that we talked about the Elliott wave projection, and this being the third wave of that projection, having a high of around 1246. We actually had a high, I believe, of about 1248, and the market has not been able to take that out. We have moved our stops to 1220, but I'm going to talk to you about repositioning that stop later on in this broadcast. Now, I have brought up our position board, which is going to show us our open positions and also stop placements. Primarily, my recommendations on the 9th were to go long U.S. dollar spread against gold and the euro dollar spread against gold. In this account, for illustration purposes, we have 250 ounces of each, and you can see the difference in terms of the unrealized profits. Up about 8,000, we've given some back on the U.S. dollar gold spread, but 13,000 is far superior, and that is based on this, the euro dollar gold spread, which is currently trading at 982. Now, the other thing that I'm noticing is although we have a black candle in the U.S. dollar gold spread, the euro dollar gold spread is still forming a white-bodied candle. The one thing I do want to pay note to is I am seeing a candlestick pattern form, which is an advanced block in deliberation, which is this, in which you have a market in which the size of these bodies are getting smaller, and they do tend to open and close above. In a regular market with an open and close, you would get a gap. Unlike these three bodies below it, which in a normal market, you can't get this in Forex because there's no gaps or interlacing, but there's a continuation pattern called three white soldiers, in which you have a candle, it opens within the body, closes higher, then the following day it opens within the body and closes higher. These, you get a continuous gap because this close becomes this open. So when you see the body length increasing in size in Forex, even though they're not interlaced, it's a very strong signal. When you see them shrinking in size, you notice that the buying is diminishing. I do believe that there's going to come a point in which we see profits pulled and we find a correction. Are we at that point now? That is the $64,000 question. My personal feeling right now is that we are looking at a fairly imminent correction in the market. However, because the market is fueled so fundamentally driven by the crisis, the debt crisis in Greece, the lack of news tends to quiet the market. You see a consolidation, and any news that comes out is read with a fever, so to speak, and a knee-jerk reaction, of course, is then implemented upon that news. So traders, the following are my recommendations. First of all, on our euro dollar gold position spreads, we currently have our stop sitting at 950. That's right in here. My recommendation is to go ahead, modify that to a good till canceled order, and move that to 970. As you can see, I'm moving it under these real bodies. If the market does want to come down, it's trading at 982. We're still going to lock in the profits from 940 to 970. It's a little bit more difficult, though, to try to trail our stop up on the U.S. dollar. But I do feel that the U.S. dollar gold spread has a more significant chance of actually finding a correction quicker. As far as our U.S. dollar gold spread, currently trading at 1232, my recommendation is to modify your good till canceled stop to 1229. 1229 on a protective stop. As you can see, it's putting it very, very tight, and if in fact the market comes down to test this range, it's going to take us out, but take us out with a profit. My feeling is that if the market runs and we get stopped out, I have no fear of buying a breakout. At the same time, my primary concern and my obligation to my subscribers is to protect the profits that we've made. So, again, my recommendations are as follows. We're going to be trailing our stops, maintaining our long positions, 1229, protective stop on the U.S. dollar spread, 970 on our euro dollar spread. For those of my subscribers that are trading either the Aussie, the Swiss franc, or the British pound, you can email me and I'll give you specific recommendations. Although with the pressure that the pound has been under, you can see it has some substantial profits in there right now, and that overall should be a great position. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Wishing you, as always, good trading. We'll talk to you tomorrow on Friday for the weekend review. Bye-bye.